Alright, welcome back to SMC Simplified. So in this video, I'm going to teach you about the places where I make entries in the market. And before I do that, let me quickly analyze Euro USD so that I can show us these places. So I'm just going to do one analysis, a very simple analysis. Then I will use that to explain the point. Okay, good. So here is my minor break of structure. If you don't know what minor break of structure is, I will advise that you check my videos on market structure and liquidity. And here is my major break of structure. Okay, so now anytime I have this, for me to confirm that the market is now downtrend, price has to close below this low that caused the major break of structure. So for now, the overall trend for Euro USD is still bullish. Some people would have come here and target as what? Change of character to the downside. Of course, it's moving to the downside, but the overall trend is what? Bullish. Okay. So now that I have gotten, my direction of the market, and then I want to make a decision, right? I'll be looking for the first thing, a break of structure. So for example here, when I have this major break of structure, the places where I look to make an entry for a buy, which I caught an entry here, is at this level here. So what happened is, at this level, I will go to my 15-minute time frame. That level I marked is my order flow. Okay, so I'll go to my 15-minute time frame, and then I will look for my fractal confirmation. So I am simply explaining break of structure. So the first place where I look for entering the market is break of structure. All right, and I don't just use all break of structure. Okay, I use my major break of structure. That's what I use, my major break of structure. Okay, because let me show you an example. This is a break of structure, right? This is a break of structure. So I don't go everywhere in the market looking for a break of structure. What I look out for is my uh, major break of structure, which is under my type A liquidity concept. Now, when I come to the 15-minute time frame, I'll look for my fractal confirmation. My fractal confirmation, okay, here we have high, low, high, low, okay, high, low. Then we have a low here. Then this high broke this low. So we have a change of character here. Immediately we have a change of character here. The last order flow before this change of character, look at something. The last order flow before this bullish candle close above this level is this. This is the last order flow. Okay, and when price push up, before price come back to this order flow, I will simply set my buy limit, because from the 4 hours I have seen that the overall trend is bullish. So I'll place my buy limit right there, and then my stop loss below the order flow. I've also explained order flow in my videos. You can check order flows and I think liquidity stuff. So my target is 1:5, and as you can see, this is 1:5. Okay, so that is how I do it for break of structure. So the same entry model applies to all the places where I trade. Okay, so this for break of structure. Let's go to the next one. Let's go to the next one. So the next one is change of character. The first one is what I just explained now. The next one is change of character. All right, but I might not be able to use the change of character that I have here as an example, because price, has not gotten to this level. Okay, but I'm going to use this change of character. I'm going to use this change of character that I have here. The reason why I'm going to use it is because it still falls under my liquidity concept. Because if you look at it closely, you will see that we have, just a minute. So you will see that we have our minor break of structure. Okay, so inside our overall minor and major break of structure, we have internal. So these are the internal. Okay, so this is the internal major break of structure. You understand? And remember that I said that anytime price close below here, that is when we have change of character. Okay, so let's see where the change of character occurs. Is it here or here? So let's zoom in and check where that happens. So it is here. This is where we have the change of character, right? So now that I know that, I'll just simply put this here so that I'll be able to identify it on 15-minute time frame. So I'll go to, oh sorry, that's not what I'm supposed to do. I'm supposed to mark the order flow. Yes, this is the order flow here. This is the order flow. All right, that's the order flow. So now we'll go to 15-minute time frame to look for our fractal confirmation. Okay, so remember, what did I do? I get the direction of the trend on 4 hours time frame using my type A liquidity type. This is my type A liquidity type. My type A liquidity has both minor and major break of structure. Okay, there are basic break of structure in the market. Let me quickly show you the basic break of structure in the market. They are the things that you have seen on YouTube. These are basic break of structure in the market. Okay, good. Now when price break this level, that's when it's called break of structure, break of structure, break of structure. Okay, and when price close below here is change of character, according to what you have learned or you've known. But I don't use it that way. I use it this way that I'm explaining to you. Okay, so now using change of character now. So when I see this change of character, all right, I come to this area. So this is my point of interest. This order flow that I map out, all right, is my point of interest. Immediately this change of character happens, I am interested in the market because this is where I am looking to take an entry. All right, there are places. Do you get? And remember, I said that my own change of character is when price closed below my type A liquidity, and this is my type A liquidity. It has minor and major. So when price closed below this low that caused this major break of structure here, that is when I consider the market to change character. So now we go to 15-minute time frame, and then I'll look for the fractal confirmation that I use for an entry. The places where I look for entry, number one is break of structure. I have shown you one example. And number two is change of character. And that is what I am showing you here. And I've explained my own model of change of character to you. All right. So now I am on 15-minute time frame. So for my fractal confirmation, we have this is a high, this is a low. So this was taken out. This is a low, high, this is a low, this is a high, this is a low, and this is a high. So I'll simply mark this low because that's the last low, and then this is the high. So now when price take this out, right, is change of character. So I'll look for the last order flow. So this order flow, this rectangle here is the order flow from 4 hours. So I'm going to look for the order flow that caused this change of character. All right, that caused this change of character here. This is where that change of character happens. Look at it here. This is where it happens. All right, because price closed below this level here. So this is the order flow that caused it. Do you understand that? That's the order flow that caused it. So what am I going to do? Immediately price closed below here, I will take my sell limit, all right, or just take a manual entry, place my entry there, and my stop loss will be above the order flow, and then I go in for 1:5. So my TP is always 1:5. Okay, this is even more than 1:5. As you can see, price hits our target nicely. All right, so that is how I do it. First of all, the place is very, very important. I don't just go about on 4 hours time frame looking for basic change of character and basic break of structure. All right, I look for key change of character and key break of structure, and my key break of structure and change of character is what I have explained from the beginning of this video, which is the minor and the major. Okay, then I use this to explain this change of character that we have here. I would have used this, but price is not there yet, so I have to look for a small version of this setup, and this is it here. All right, this is it here. So now the next is liquidity sweep. So for liquidity sweep is very simple. What I look out for is when market takes out um previous high or low with a week. All right, with a week. Okay, so let me show you. For example, here this low was taken out with a week. Okay, look at it. This low was taken out with a week. Can you see that it was taken out with a week? And when that happens, the same entry model, I'll go to 15-minute time frame, and then I'll look for my fractal confirmation for entry. All right, very, very simple. Look at this one. Can you see? This low was taken out with a week. So let me show you the entry here. So this is going to be a buy, not a sell, because we are expecting a rejection. You get the concept. So let's go to 15-minute time frame, and then let me show you that. So these are the places where I look for entering the market: break of structure, change of character, and sweep of liquidity. All right, and that sweep of liquidity must be in the overall direction of the market, and the overall direction of the market for this example is bullish. So that means in our fractal confirmation we'll be looking for a buy entry. All right, so it was when the low of this sweep that we are about to check was taken out, that is when we now have a change of character. That change of character, this change of character. All right, but before that, this is the sweep. All right, so you can see that price was dropping, high, low, high, low and high. Then we have a low and a high here. Okay, look at it. So this is a high, this is a low. Price was coming to sweep that on 4 hours time frame. So this is the pattern on 15-minute time frame: high, low, low, high, or high, low, and then high, low. Okay, so whether you use this or you use this, you still get the same entry. So when this was taken out, let's look for which level took it out. So this is a candle that took out this level here. Okay, remember we are on liquidity sweep. Okay, and the trend is buy. This downtrend just came to sweep that previous low that we saw in 4 hours with a wick. All right, so immediately we see that sweep with a wick, we come to 4 hours time frame. So this is the sweep with a wick that happened. So immediately it happens on 4 hours, we come to 15 minutes. All right, and then this is the last order flow. This is the last order flow. Do you get the concept now? So immediately this candle close above this level, and then I can spot my order flow. All right, immediately I will go in for a buy when price retraces to this level. Okay, that means when this bullish candle closes here, I will just wait for price to come to the opening of the order flow, and then I go in for a buy. Okay, this is a buy, not a sell. Sorry. Then we make an entry here. Okay, and then stop loss will be below the order flow, and then TP, like I said, is always 1:5. 1:5, irrespective of the movement of the market. So as you can see, this is 1:5, and the price still continue to the upside. Can you see? 1:5. Can you see that? So I've been able to explain 3 places where I make decisions in the market. This is different from point of interest. My point of interest is the order flow. Why the places where I look for entry, all right? So those places we definitely have order flow. Do you get the concept now? Aha. So those places are the break of structure, the change of character, liquidity sweep, which is just the example we just saw now, and then visible high and lows. So these visible high and lows are the things or are the highs that everyone can see in the market. Okay, for example, this one that we have here. All right, we have a high here, then price was bearish. When price is getting back to this level, we expect a kind of reaction. Do you get? And that is what we have here. So even though the price or the direction of the market is bullish, we expect that there's going to be a form of retracement here. And because our risk to reward ratio is 1:5, we can quickly catch the retracement on a 15-minute time frame before price starts pushing to the upside again. So let's check this example to see if our entry is successful or will be successful. So when price gets to that resistance level, we'll look for our entry strategy, which is the fractal confirmation. All right, so price is going to be making series of higher highs and higher lows because the price is bullish. So this was taken out. Okay, so when this was taken out, let's look at what we have. So this is high low, high low. All right, and then we have, let's check this. So this is the last low, okay, that caused a break of structure. So when we have this price close below this low, our entry will be at this last order flow. This is our last order flow. So that means our entry will be here for a sell. Our entry will be here for a sell, and stop loss will be here. So this is going to be a losing trade. But when I have a losing trade, I don't leave the market. I look for the next opportunity, because the next opportunity always makes me recover the loss. So I just lost 1%. Okay, so I will now look for another entry to the downside. So what I will do is I will wait for another movement of the market to form higher highs and higher lows, then a change of character to happen, then I go in for a sell again. I'm not changing the bias. All right, I'm not changing the bias. So I'm just simply waiting for price to do the same thing again, to form another higher highs, higher highs, right? Or higher low, higher highs, higher low, and then I'll look for another change of character. Okay, so here we have, let me show you. So when this resulted into a loss, you can see that this is another entry. This is high or trend high low, right? And then we have this to the upside. Okay, and what did price do? Price came back to take out this low. All right, so you can enter. I will use two examples now. You can see we have a low here. Okay, this is a low. Let me delete this. Let me also delete this. Okay, now before this low, this is our order flow. Let me show you. This is our order flow. Can you see that? This is the pullback before this candle closes below. So if you don't use this, you can also use this overall external low, this one here. Okay, you can use this one as well. So if you use this one, right, what do you have? This is the candle that closed this level here, and then our order flow is this green candle here up to that level. You can see that this one overlaps the previous one like this. Okay, so we have it like this. Now the question is, which one are you going to use? If you use this first one, and then you TP, then you see this one, you can simply make another entry opportunity here. So you enter this trade, then you enter this trade. But let's say you miss this entry will give you another, or this change of character will give you another entry here. So if we use the first one, okay, our entry will be here, and then stop loss, now let me explain something here. Because this pullback does not have a wick, okay, unlike the other ones that we've been doing, this pullback does not have it, because it does not have a wick, okay, because our stop loss supposed to be at the top of the pullback. We are supposed to put our SL at the top of this candle because it's far away. You understand? It is far away. So what we are going to do is we are going to use the high of the last break of structure as our SL. So it's going to be a little bit above it. Do you get the concept now? Because we don't want to put our stop loss here because the candle is huge. Okay, it will reduce our profit. if we put SL here, so we do the same thing, 1:5, 1:5. So our 1:5 is not complete before we have another entry. You can see this is the 1:5. Entry successful. All right, entry successful. But as I was saying, let's say you miss this entry here, okay, or you took the entry. Don't close your trade when price is coming here. So whether you take this entry or not, this is another entry opportunity. Here is another entry opportunity. So let me delete this and let's look at this order flow that we have here. So this is it. Okay, let me delete this order flow that is from 4 hours. Okay, so let me delete this one also, which is the first one. So we have it here. You get the concept? Let's take this out. So this is, we are using this now as a change of character, and then this is our order flow. So entry will be here. Entry will be what? At the beginning of the order flow. Stop loss slightly above it. Our TP is what? 1:5. Okay, 1:5. That's our TP. 1:5. Unfortunately, this is not up to 1:5, but let me see if price then, okay, not unfortunately, price eventually tapped our 1:5. It just took a longer time. All right, so if you were trading Proframe, this is going to be a very challenging moment for you, because the market or the Proframe would have recorded this profit, then the next day you are losing close to 90% of it. But on your account, you won't have any challenge like if you are trading your own personal account. So you can see successful, 1:5, successful. So like I said, when you make an entry using this strategy, don't adjust your SL to break even or close the trade when price is approaching your entry. All right, it is either TP is it or SL is it. All right, no adjustment when you enter the trade. So that is about um, visible high and lows. So I've been able to explain to you in this video the 4 places where I look for to make an entry in the market. And the first place, sorry, let me go to 4 hours. And the first place is what? Break of structure. Second one, change of character. Third one, liquidity sweep. And number 4, visible highs and lows. All right, so using this strategy, you will be profitable. So thank you. If you have any question, please use the comment section, like this video, subscribe, and share. God bless.